Most major financial institutions were not doing business before, even after the sanctions were lifted, because of most major global banks being penalized at one point or another for OFAC violations. Very few, if any, touched the business, and it was kind of smaller regional banks across Europe and the Middle East that actually touched the activity. So for the most part, no. But industrials had obviously moved in. The oil and gas sector moved in. So that creates a different issue. The financing and the underwriting from an insurance standpoint was a different issue that needs to be addressed.
So outside of oil and gas, we're telling companies, don't do what you're not already doing.
Essentially, yeah.
Correct. Let's go to the oil and gas story side, because Rouhani's saying, you know what, Trump administration, we're going to sell oil.
Well, they are going to continue to sell oil, but in vastly reduced quantities. And you mentioned South Korea. I mean, South Korea is almost already out of the crude importation business from Iran. They're going to be able to continue to import some condensate. Now, there are 8 countries that are going to be granted exceptions to continue to import, but they're importing again at vastly reduced levels. And even China may get one of these exemptions because it's made some reductions in the Iranian import. So it's not trivial by any means, the amount of oil that's come off this market.
And why is oil at 63
bucks?
bucks?
I think because you hear waivers. And so people think basically it's one and done and Trump's not going to go any further with this. And if you look at the rhetoric of the administration, they say over the next 180 days, these countries that are allowed to continue to import are going to have to cut again. And your point was so spot on about the secondary sanctions, because not only are you not going to be able to import at the same quantities, it's going to be harder to ship it. It's going to be harder to insure those cargoes. And so a whole host of things are going to reduce Iranian barrels further on.
Yeah, and we know most major insurers won't underwrite policies related to shipment of Iranian oil over the next few years. They've already begun winding that back. So
Do they need that, though, Daniel?
Well, I mean, if you think about it, a tanker that's holding oil needs to be insured in case of unforeseen event.
Well, you said major, and I'm just wondering, Iran has always done things its own way. I wonder if there's sort of a shadow insurance market out there as well, if you know what I mean.
Well, I don't know about the shadow insurance market, but for most major providers...
Maybe not pirates, but you get my full...
Yeah. But, you know, the pieces that you need to actually operate global trade have begun kind of reevaluating their risk management views, whether it was in the insurance space or in the banking space. So it just further makes it more difficult, even with waivers, to move the goods and to get paid for the goods.
Right, and Iran does have their own tanker fleet, but you know, they're going to have to use those tankers soon to store oil. So there are going to be less Iranian tankers available to move this around. So again, I think the market is being way too sanguine about the situation. More oil is going to come off. It's going to be harder for Iran to place those barrels, and this is just beginning.
Because we've seen Saudi Arabia pump more. We know that.
Right.
We've seen Nigeria, Russia's pumping more. I guess partly because they assume the Iranian barrels are coming off. But if they don't come off, or at least as much, maybe somewhere in the middle between what the market thinks, you're still going to have too much oil, no?
Well, I think this is interesting. If you had said in May that 1 million barrels of Iranian exports are going to be off the market by November, people would think that was very bullish. Sure. We've had a situation where the Saudis and the Russians have rushed to fill the gap. The question is going forward. You mentioned Nigeria. If Nigeria has problems, is there enough out there? If the administration pushes forward with further Iranian reductions, that's going to put a lot of pressure on getting the U.S. Infrastructure bottlenecks cleared up. So right now we are in a situation where OPEC has responded. But going forward, it's going to be very interesting to watch how this balance plays out.
Well, and the one big variable that's still outstanding, there haven't been penalties levied against Saudi for the Khashoggi murder. And so there is the looming threat of, if the administration doesn't act post-midterms, that Congress will act and implement additional sanctions. Now, to the point about kind of waiver confusion.
You think they would do anything with regards to oil? I mean, the reality is that would be a punishment to the U.S. consumer vis-a-vis gas prices.
But it's how does the market interpret what these sanctions mean versus what they think they mean. Look to Turkey as an example. The sanctions were against 2 individuals, not the entire country, and look what it ended up doing to the economy. Saudi is obviously in a very different place, but there could be a misunderstanding of what these sanctions mean.
Here's the problem. If you tell somebody not to do something and they keep doing it, eventually you're going to have to either step up or step back. If Rouhani keeps selling oil, if he defies the sanctions, what's our response?
Well, the important thing on the defying sanctions, the money for these oil transactions, at least in the waiver environment, will be going into escrow accounts. The IRGC, who's the primary target of the sanctions, won't be able to benefit.
I'm sorry,
the Revolutionary Guard.
Okay.
They won't be able to benefit from the money that's being paid for these sanctions. So the waivers, in a sense, are somewhat of a good thing because they kind of forced legal trade of Iranian oil, in a sense, and it ties up the money for those purchases.
To a few markets that we can sort of help.
Yes.
Yeah.